And we're in the last week of July. That means August, when everyone wants to go on vacation, everyone will be relaxing. But you know who's not relaxing this week? The Federal Reserve, the Bank of Japan, and the European Central Bank. They're all slated to announce interest rate decisions this very week. What will they be? And what will happen to the markets? Well, let's find out. Joining us now to discuss is Defiance ETF CEO, Sylvia Jablonski. Welcome back, Sylvia.
Thanks so much for having me. Good morning.
Glad to see you again. Look, we got Bitcoin going like around 29,000. We have a ton of options all clustered around the 30,000 mark. What's going on? This was supposed to be a quiet week, all things being equal. I thought we'd stick to 30,000. Am I panicking a little too much?
Yeah, it seems like we go in these erratic cycles with Bitcoin, and they more or less seem to be kind of like reattaching themselves to tech stocks. So we saw tech stocks fall a little bit last week, and that came around Tesla and Netflix, and it goes back to that. I think just, risk off, go back to the sidelines. Let's wait and see what the Fed does, until they kind of give us the all clear on no more rate hikes, or maybe, one and done, and then holding them a little bit longer. I think we're just going to kind of sit in this, range bound area. And really until we get some good news with Bitcoin, like I think, if we start getting some news around the filing for BlackRock, for example, or the conversion of Grayscale, for example, is going in the right path. That's something that'll kind of jack up the price of Bitcoin again. But I think in the absence of news, summertime doldrums, equities playing it kind of safe how they are around the Fed, it's not wholly unexpected. But I wouldn't panic, really. I mean, there's no reason to, think that it's kind of precipitously going to drop.
Just for disclosure, Grayscale owned by DCG for now. If you have $125 million, though, that could change, because it's also owns CoinDesk. But if you want to buy us for $125 million, you're more than welcome, apparently. But this one and done idea. Okay, so it seems the market is poised that way, that it's one and done. But the Fed is not saying that. They're like, no, what's this one and done nonsense? We said we're going to raise until we're happy with inflation. What makes you think that one and done will put inflation? Granted, we're at like 3% and change, but that's not one. That doesn't sound one and done to me.
It doesn't sound one and done, but there is a fine line that the Fed has to travel along here. So while we have to kind of listen to the Fed, right? I think it would be foolish if the Fed told us that they're going to raise rates 4 times to kind of ignore them, because the truth is they keep doing that, right? They keep doing what they're saying they're doing. But if you look at the data, it's starting to look compelling in terms of inflation actually coming down. And I think that there's a higher likelihood that the Fed will perhaps, although they're not, they're certainly not saying it, but if you have inflation data coming down, if you have the job market starting to, although it's super strong, it is starting to lighten up a little bit. Consumers are kind of like less impacted on the bottom line by their spending now. And I think, we sort of have to see, right? Because I think if the Fed managed to pull off this soft landing, right, I don't think that he now wants to, put his foot on the gas and just kind of hammer that out and throw us into a recession. Like we've come so far. So I think I do believe that the Fed will hold rates higher for longer, and that will bring inflation out of the system. I don't think that they're going to start going on a rate hike campaign. I don't see it for them.
And nobody's talking about the fact that they still have this balance sheet. This is the part I don't quite get. Why are they not selling the bonds that they have on the balance sheet to raise rates? Kill 2 birds with 1 stone, lighten the balance sheet, raise rates, everyone's happy.
Yeah, they still have, it's a great point. And we haven't talked about that in a while. It hasn't been, greatly covered, but there is this big, massive balance sheet that has to unwind here. So that's a fair point. I think they probably started talking it from that side, and then it becomes a little bit seamless to the market. But it kind of doesn't matter, right? I think it's 1 or 2 hikes away. Even the Fed referred to a couple more, right? So if we're 1 or 2 hikes away from the end of this, the market has held up, corporate America has held up, earnings are coming in, kind of okay. I really think that we're towards the end of something versus another, kind of year of ongoing pain.
Sylvia, in our first segment, we spoke about AI. You say AI and machine learning continue to be a generational opportunity for investing in the future of tech. What do you think this means for TradFi and for crypto?
Yeah, I mean, I think that, and I think that AI is going to transform, every sector across the board, right? Whether it's robotics and healthcare, data research, things like this. And I think that, AI can also, benefit crypto in various ways. Everything from, if it becomes globally adopted, for example, being kind of the source of monitoring, kind of credit risk, balance sheet, monitoring perhaps more efficient, mining, trading, pricing. So it kind of remains to be seen how it hits the different sectors and how it kind of plays out. But what I think is that, information and data will be processed more quickly, more efficiently, more abundantly, and that'll allow for, the construct of various things to work out, whether it's regulation of crypto, trading of crypto, custodying of crypto, and, kind of remains to be seen there.
And something else that came up in our first segment, Twitter is rebranding to X, and Dogecoin pumped on the back of that news. Any reaction to that? We always see Dogecoin pumping on Twitter news.
Yeah, I mean, Elon is the master of all things popping, right? I think that rebranding, it's this great, kind of like how will this play out? Will there be ad spend, using Dogecoin? Will there be kind of like purchases and sales? How will this monetize? So, it remains to be seen what he kind of does with it. But it feels like a meme stock trade to me today.
We got to ask about equities here, because you are not exactly, I guess you're not exactly bullish when it comes to earnings in the S&P 500. Give us your take here and what that means for the overall market. I mean, is this really chilling things out, if you will, in the equities? Is that going to have an effect, and is that going to have an effect ultimately on crypto, which is the only thing anyone watching this show cares about, apparently?
Yeah, so I'm not actually not bearish on equities. I just think that year over year the estimates have fallen, so the expectations for earnings are so low. I actually think that earnings are likely to beat the estimate, the estimates that are kind of out there. So what happens is, if earnings kind of beat, and I think as of last week we are still around an 80% of all names that have reported, though it's a small percentage of names that have actually reported, have beat on revenue. So that's long story short, I think, corporate America is holding up. I think if, the Fed is stable, earnings are coming in, it feels more and more like we're avoiding the soft landing, that FOMO trade comes back into play, and people go out and buy more Bitcoin, and they, go out and buy more Ether, as well as equities and high risk types of, or, what are viewed as higher risk types of stocks.
Sylvia, we're going to have to leave it there. Thank you very much for joining the show this morning.